Good morning, everybody. Welcome to Loan Officer Breakfast Club. Great to have you here this morning. We're going to have a fantastic day, as always. I hope you're doing well. Let us know in the chat how things are going, because we're about to get things started, I don't know, now. We're brought to you by the Mortgage Marketing Animals every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern Time for your free coaching pleasure.
You know why?
Always.
You know why?
Why?
Because we can. Because we can.
That's right. That is why, Carl. Indeed, my friends. Well, let's see who we've got in the house right away. First on the screen. You know what, Carl? I'm going to give you the honors. I want you to pick somebody. Go ahead, pick somebody just to get this party started and see how they're doing.
Do I pick the one that came up on my screen first?
Whoever you like, man.
I like them all.
Complete authority on
I like them all. So the first one that came on my screen was Don Lake. How you doing, Don?
Don Lake.
Don popped on first. How you doing,
Hey,
Don?
guys. Hey.
Where are you at today?
Where am I at?
Yeah.
I'm in Orlando, Florida.
Oh, no wonder it popped up first on my screen.
It was the shortest distance to you.
It was actually, I'm in High Point, North Carolina.
Oh, okay. All right. Well,
but Orlando's a happening place, man. Dude, I remember going to Orlando, and there was like nothing there. It was like this little, small, itty-bitty town out in the middle of nowhere. Like, we'd say, hey, I'm going to Orlando, and the always question, why? There's nothing there. So it's not like that anymore, is it, Don?
No, and I grew up here. The two biggest things that happened population-wise, because until like the census in 1950, there was only 60,000 people in Orlando. But
wow.
What put it on the map was 1957. They built the Martin Company, which became Lockheed Martin. That was huge. And then, of course, the Disney, and then everything that followed cascaded after Disney. The SeaWorlds came right away. And so that's what exploded it.
Yeah.
Why do you think
in Ocala, just FYI, Ocala, Florida, and I know, Owen, you know where Ocala is, right? We have a friend that lives there. Yep.
I do.
So Ocala, Florida, turned it down. They turned Disney down.
Oh, no way.
Wow. They turned them down.
Oh, my God.
They turned them down because Ocala didn't think they were going to pay enough taxes. And so Ocala turned them down. And I know everybody's vacationed in Ocala, which, by the way, is a stinking beautiful city. And so, I don't know.
I never even heard of Ocala.
I was just there.
Yeah. And frankly, maybe some people in Ocala are kind of glad it worked out that way because it is a cute little town, So I thought that was funny though. Yeah, they weren't going to pay enough taxes, and so let's not let that monstrosity come into our town without paying enough taxes. So turn them down. Yeah. Oh, by the way, the mayor did not get reelected. Just FYI, just throwing that out there too.
Awesome. Don, so, well, we still got you, man. I don't know. What do you think about going into the end of the year here? How are you going in strong? Where are you at personally?
Through the end of September, very strong. And, but my little disruption on where I'm from, the bank I work for kind of put a freeze on their portfolio and doctor loans to the end of the year. We were over budget. We sold it too much. So my wagon's a little empty. So on portfolio, which my bread and butter. So I've had to try to turn the battleship and do a lot more sellable business. So, I'm getting coaching. Michelle's been coaching me, and I'm back. And after just floundering for a couple months, figuring out what I was going to do, and of course I get every recruiter in the world calling me because the word got out. And then now I'm back at just doubling down. I'm back doing the activity like I'm supposed to do. My daily success plan is back in motion, and it's great because I was in my head. I was like, I call these people. What am I going to say? I don't know if I'm leaving or I'm staying. And that got to me, and for 2 months. But I'm now back. The only solution to this is work your way out, and no matter what you got in the wagon. So I'm back at daily success plan and making the calls and setting up the appointments. That's the only way out.
Wonderful.
He's
Good
on
stuff.
call service every day.
Awesome.
You got a good business going, Chris. When the source of the fund says, "Hey Don, you're selling too many loans."
That's what
It ran out. We ran out of money.
So,
yeah.
Good for you, Don.
Well, that's what I was going to say. Is the good news is it doesn't matter what time of year it is. DSP always works.
Yeah, it only always works.
Yeah, you're good to go. Good stuff. Interesting. I thought it also interesting that with what Don was saying, the portfolio loans. There really is a big difference sometimes, isn't there, Don, between the portfolio and the agency stuff. Sometimes the local banks can really
Sure.
uh, take
Deal a winning
advantage
hand.
of certain things,
Yeah,
right?
sure.
Yeah, that's how I got into the business. I cut my teeth up to the bank. I was a former private banker, and so that's my kind of thing. I'm not an FHA guy,
Yeah.
but yeah, so you're pretty limited, and it's just banks that do it, and it has its own animal. I say it's a parallel universe to sellable with some distinct differences, pluses and minuses, but
Yeah.
it is its own animal.
Yeah. Yeah, and just to be clear, these are kind of like the deals that get done. You know, you've got somebody at the bank that's got a ton of money, kind of thing, and they get a really sweet deal or something like that to keep their money there. Is that what I'm thinking, or no?
Well, yeah, you can use that for relationship pricing to get the pricing down, the rates. They will take that into account for sure.
Uh,
But the problem is that portfolio is used by a lot of other people, like the commercial team,
got it.
other commercial real estate. So there's a little political battle over that portfolio. It's
Who
limited.
gets
It's
the money?
finite.
Well, dude,
Yeah.
just spread nasty rumors, Don. Come on, man. What's wrong with you?
Come on, what are you new?
Watch CNN and Fox for a little while and learn the ropes, man. Learn the ropes.
But that's the lesson in that. The problem is it's a finite pool. So I painted myself in a corner to it.
Well, you're gonna do just fine. All right, let's get moving. Hey, I'm gonna put a link in the chat I just did to today's news for Loan Officer Breakfast Club because it's got this story about blockchain and how and I don't know if Owen's gonna. I know you don't have this on your radar for today, Owen, but if it comes to mind, or if you know anything about it, there's about how blockchain. I don't understand the ins and outs of this, Carl, or Chris. You probably do it. Like it's this thing that can't be changed or anything like that. Whatever. I don't know how, but like they're seeing that blockchain in the future with mortgage might be where it's almost like you get to carry your mortgage with you. Like, oh, I've got a 4.5%, but I want to go buy another house. With blockchain, I can move my 4.5% mortgage over to this other house and then stack on top of that with a if I'm short, extra mortgage money on top of that. So like it becomes this really weird thing where like it could save all kinds of money. And I don't know what it means to us as a whole as the industry, but anyway, interesting story. And it's a video. It's an interview with a guy for 20 minutes. I put the link in the chat. So if you get a chance, check that out. And before we bring Owen Lee up, we got a couple more minutes. Carl, what are we doing at Animals today? What's happening today?
Dude, today's an epic day. We're going to be talking about whale hunting today. And, I might have kind of missed the boat on this a little bit. I've always kind of preached, that stay kind of in the middle tier of the top 4%, of course, but the middle tier of that top 4%. And, I might have missed the mark a little bit here. So we're going to talk about whale hunting and, how they think and what attracts them and what do you say and, the follow up. It's different. And so that's what we're doing today at 2:00. So members, make sure you're there. I think it's going to be a little eye opening. And frankly, the simplicity of it is what's particularly intrigued me on this. So we got a special guest going to be talking about whale hunting. And so that's what we're doing today. Make sure you're there.
Awesome. That sounds great, man. Good stuff. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. All right, well, let's get to it. Mortgage baby.
Morning, everyone.
What's happening, man?
So I often get asked, why aren't ARMs a longer or a larger percentage of the mortgage marketplace?
Yeah.
And the answer is Don Lake.
It's true.
Balance sheet lending. It really the province of regional banks and community banks, and what the thought process is they have so much money to lend, so they make loans that largely are not saleable to Fannie Mae and Freddie Mac because they don't meet the guidelines. They're the classic make sense loan, right? Somebody's got a lot of money, maybe tied up into an asset, or they're a doctor, the doctor loan, because the person's going to have rapidly increasing income, even though doctors are generally horrible with their personal finances. But it's that kind of customer that you need, and you make a lot of those loans, but then they fill up the bank balance sheet. You make a lot of ARM loans, which are saleable in the secondary market, but not profitable because they don't hang around long enough to be as profitable as a 30-year fix. By its definition, an ARM loan is really only going to last 2 or 3 years. That's what the borrower is telling you when he signs a 5-year ARM or she signs a 5-year ARM. Excuse me. So the bank keeps this on the balance sheet. It's fantastic. It's a product that most people don't have access to. But then when the balance sheet fills up, the bank just comes in and shuts off the lights, turns the key, and closes the door and says, see you later. Maybe we'll bring it back in 3 months, 6 months, 9 months. We don't really know until there's more room on the balance sheet. And if the bank fills up the balance sheet too much, then the bank gets in trouble with its regulators. And so they're unbelievably good and attractive products while they're available. But unlike a 30-year fixed rate or an FHA or a 15-year or whatever, it's a finite pool that bank can do, and that's why it only hovers at a certain percentage, because there's only so much room on regional bank and community bank balance sheets. So anyway, Don, great job though. I mean, filling it up. You obviously did it, so good for you. Anyway, how you doing, everybody? We've got a little bit of market news this morning. I will say this, just a public service announcement, and I don't mean to sound like a broken record, but tomorrow we're going to get a print or a report on CPI, Consumer Price Index, and the CPI report tomorrow, I'm predicting, will have a disproportionate effect on the market, whatever it is, good or bad, because we've been starved of information on jobs and inflation over the past several weeks due to the government shutdown. So if you have loans, you might want to consider locking them today, because we could get, a good print, and interest rates could move in our favor, and that's a possibility. But I think there's a downside risk to a negative market reaction if the inflation number is bad. They're predicting, I think, 0.2. So if you get a 0.3 or a 0.4, I just think we're going to lose a bunch of basis points right out of the rip, because that will take on prominence more than it deserves based on the fact that it's our only data point in weeks. So just food for thought. But I wanted to kind of pull this, this is about a 6-week chart. The last 2 weeks, you can see towards the right side, has been pretty good. We reached our high water mark right before the September Fed meeting, 25 basis point cut. And then we actually went down a little bit, as you can see in the 2 weeks that follows. And the reason why is because the market didn't think there was enough dissension inside the Fed. In the last meeting, there was only one dissenting vote. So only one Fed governor thought we should reduce more, and he was way down the chart. And so that was kind of an outlier. But the market likes to see 2 or 3 Fed governors pushing for them to be more aggressive, because they think that portends the future. So when they didn't see that, the market receded. Now we're getting a run-up to the next Fed meeting, which is coming next week. And you can see kind of the run-up there. 25 basis points already totally priced into the market. December cut, is probably 75 to 80%. I didn't have a chance to check it. Last time I checked, it was 86% a certainty. So these things are already priced into the market. That's why I think there's a greater downside risk with that inflation print tomorrow. Powell just gave a speech in which he emphasized risk to the labor market. So what's going on in the labor market is that unemployment has gone from 4% to 4.3, 4.4. There's a lot of like foo-foo ivory tower economists that think that if unemployment goes up by 0.5%, then it has a risk of spiraling out of control. And we're at 0.4 right now that it's gone up. That's why there's a lot of people that are worried about the labor market. So, but you can see, what does this mean? This means pretty gosh dang good skiing for all of us on this call. For the 299, can we get one more person to join the call so we can get to 300? I mean, can someone have their mother dial in or something? But anyway, we've got, this is good sledding for us, right? Let's go to the next slide and just see. Jen, if you could advance the slides. So if you look at where we are, right, this is a 1-year chart. You can see we had that like 2 weeks of good rates last September. Then we went in the trough, and it's taken us a whole year to get back up to breathe this air again. So, when you talk about whale hunting with Carl this afternoon, or you talk about doing a call blitz or the folks in the Alliance, this is why you're seeing a payoff. This is why you're seeing a disproportionate payoff for those that have marketed and those that have been diligent about their prospecting. Is because the rates are moving in your favor, your prospecting is paying off. I saw a lot of comments in the chat. The DSP only works every single time you use it. Correct statement, by the way, as far as I'm concerned. The so-called 11th commandment. Moses dropped that tablet, which is why we don't have it. But anyway, this is why you're seeing that pair off, right? All the little things, right? One bad jobs report in January, which turned out to get totally reversed. Tariffs, remember the Trump tariffs were going to send inflation out of control, right? None of that really happened. So here we are. We've come back. So this is what's happening. This is why you got to keep persistence up on your prospecting, because it is paying off for you right now. We also have record number of new homes for sale. I shouldn't say record, high number for the last 5 years, high number of existing homes for sale. So we finally got some inventory. One other thing I will say, I just got back from 5 days in Las Vegas for the NBA National Convention. By the way, to everybody on the call, I would recommend not ever staying for 5 nights in Las Vegas. And it's like a 2-night town. I didn't leave the giant hotel and convention complex literally for 4 days.
Right.
My skin did not meet the sunshine. But anyway, one of the things I heard was that we are going to have this inventory for a while, and that the NBA, and I will get the charts and we'll look at them in a future week, is actually predicting some home price deflation, especially in the South and Southeast. Nothing crazy, but in areas where it went up in order, and so much so that it will drive the national number negative, right? Which is actually really good for the real estate market. Okay. So, we had a record run up since, 15 days to slow the spread. Remember that, which is kind of the official start of COVID. Record run up, unsustainably so. So a little pause and a little downward pressure. We are a unit and volume driven business. So if our loan amounts go down 5%, 8%, but our volume goes up 30%, that's fantastic for us. So just keep an eye out for that. But do your prospecting. I wanted to flip over to one other thing that we were talking about in Las Vegas that was fascinating. Of course, we're all there, the whole mortgage industry, 5,000 of us. And we had Director Bill Pulte decide to go on a tweet storm about the GSEs being released. And we've seen this so much. Let me just give you a little bit of inside baseball on what the developing thinking is that they're spending so much time on the so-called IPO, right? Unlocking the shareholder value of Fannie Mae and Freddie Mac, which would be substantial. This is neither a pro or a con comment. I'm generally, even though it's going to cause some disruption, I'm generally pro on GSE release because I don't think the day they went into conservatorship 17 years ago, anybody thought they'd be in for 17 years. They thought it was a 2 or 3 year process. So what they're thinking is there's going to be a big IPO sale, right? They're going to sell stock. It's going to be the biggest ever, the biggest IPO ever. The biggest IPO ever, I'm not kidding about this, was a Saudi gas company. I think it's called Aramco or something like that, Aresco, and it was the largest IPO ever. And they think that Fannie Mae and Freddie Mac going public could beat that IPO by 20%.
Wow.
So regardless of your politics, we all know that the current occupant of the White House likes to be number one, right? He would like to be the captain of the ship that is the largest IPO in the history of the stock market. United States taxpayers could reap a benefit for they're predicting $30 billion, right? That would be a huge financial gain on their investment that they made in 2008 in keeping Fannie and Freddie afloat. Gigantic returns on that investment, which generally could be the last thing that really solidifies that the mortgage industry is back, right? We committed this in that was the 2008 financial crisis, and we paid the U.S. taxpayer who bailed us out back tenfold, right? That would be a good story for our industry itself. And but yeah, these tweets keep coming, and what's happening is there's no corresponding conversation, deep conversations that need to be had about what Fannie and Freddie are going to look like when they come out of conservatorship. And there's two tracks that they can come out of conservatorship. The legislative track, which would set all the rules, that's never going to happen because there's not 60 votes for GSE release in the Senate. So that's dead, right? So we have the administrative release, which will cause a rewrite of all the rules, which is going to be at least 6 months of deep conversations about what Fannie and Freddie are going to look like, right? Are we going to get an implicit guarantee? Are we going to get an explicit guarantee? Are we going to get no guarantee? But nobody's talking about that. So people are now thinking that this is largely about the stock sale. That's the headline, right? We just made $30 billion for the taxpayer. It was huge, biggest ever. And then Fannie and Freddie are going to stay in conservatorship because there's no realistic plan being developed to kick them out. The inside whispering in Washington, D.C. is that the president is desperate in a good way, not desperate like, but desperate in we got to hold on to the House because if we don't hold on to the House, my last 2 years of my presidency are dead. Impeachment 3.0, all this stuff that would come with it. And so they don't want to kick the GSEs out of conservatorship because nobody knows what it's going to do to interest rates. Nobody knows. And so, and then the 2028 presidential election starts the morning after the 2026 midterm. So a lot of people are thinking this is going to be a stock deal, and then they're going to be kept in conservatorship for years. So that was which would not be horrible for the mortgage industry. I'm generally a free market guy, but stability has value when you're selling hundreds of billions of dollars of bonds backed by home mortgages. So anyway, that was kind of a lot of conversation going on in Las Vegas while this Bill Pulte tweet storm was coming out. If you look at this, it just kind of backs it up. I think we have one more slide, Jen. If we go to that, this is from The Hill, and The Hill is a political periodical, a political publication. It generally does not write on home mortgage industry at all, real estate industry at all. It's a political watching publication, and they just talked about how this has political value, right? To unlock this, and that's why they're looking at this. If you, I think, I don't know, Jen, if we have one more slide, but so, this would largely be a political deal. I don't think that Fannie and Freddie will be out of conservatorship this year. They could very well do the stock deal this year because that's a much simpler transaction, even though that in and of itself is complicated. It's not as complicated as kicking Fannie and Freddie out of conservatorship through the administrative route. And so anyway, when you see this and you don't know what's going to happen and it's creating uncertainty, just lower that uncertainty a little bit, because I think that where it's going to be a little bit more smooth sailing than some of the news might suggest.
Hey, just as a reminder, if you're enjoying Loan Officer Breakfast Club here on YouTube, you can catch our live shows. The live shows are really cool because there's oftentimes downloads and giveaways. It's really, really fun. To subscribe, you simply go to loanofficerbreakfastclub.com. That's loanofficerbreakfastclub.com. Subscribe and join us on our live shows. They're 8:30 a.m. to 9 a.m. Eastern, Monday through Friday. Hope to see you there. Wowza.
So that's it.
So what you're saying is there's not a lot going on right now, and
pretty boring.
We shouldn't expect any major changes coming up or anything like that. So
man,
well, that is
interesting.
but that is kind of the message, Carl, because what the thinking was is that there will be a sale. I don't know if they're going to get it done by December 31st. I think they're saying that to advance the thing. Fannie just had a huge change in leadership yesterday afternoon. They booted out the lady who was the CEO of Fannie Mae, and they've got new leadership in there. Generally, that's not something you're going to do 30 days before you do the largest IPO ever. You want stability before you ride into a market IPO like that. So it might happen by December 31st. It might happen the first quarter of this year, but the stock sale is going to happen. But I don't think they get out of conservatorship that way. I think they're going to be in conservatorship for years. So when you say there's not a lot going on, there isn't a lot going on as it relates to the rules that govern Fannie and Freddie, and that's kind of the story. There's a lot going on as it relates to the stock, but that's different than the day-to-day things that affect the home mortgage market. And they've got to keep up the confidence of the bond buyers. That will keep interest rates low, or at least I don't know if interest rates are low. We're all kind of punch drunk remembering the 2s and the 3s. Personally, I think they're low because I've been in this industry longer and seen them higher. But they got to keep the confidence of the people that actually are the end buyers of the mortgage high, because lack of confidence will drive up interest rates. So
wow, good stuff, man. Hey, we're going to try something, guys. We're going to test this. We're going to experiment with something.
Oh dear.
If you want the slides, just type slides in the chat. Just type slides in the chat. We're thinking that you will get an email with the PowerPoint now just by typing slides in the chat. And
no way. Shut up.
It's what they're saying.
That's
what the smart people are saying.
Technology there, Mr. Garay.
Yeah. And it looks like at least a couple people have put that word into the chat at this point. So.
Oh, someone typed got an email.
Oh, really? Did you get an email? Let us know if it's working.
It might already be working.
Yeah, so
someone
it
said
works.
it works.
Hey,
Yeah.
wonderful for us. All right. Well, that sure makes things easier, doesn't it?
Well, see, we could make this a little bit more fun.
Is
Then
there
we could make it like, I love, I don't know, I Jared. You have to type in I love Jared, and then you get the slides.
Right. So you have to do it perfect too. We'll even
yeah.
put capitals where they don't belong. We'll make it cap sensitive, and that'll make it real challenge.
Yeah.
So, anyways,
What about if you just typed underwear? Do you get a picture of Frank and his skivvies? That would be fun.
Hey Frank, hey, just for clarification,
skivvies. What?
Hey, just for clarification. So, does it send it to the email that I used when I registered for the Zoom?
I think so.
Yeah, that makes most sense because that's how we'd have
Yeah,
that email.
exactly.
And so if you're looking, make sure that you go look on the email that you put in. And by the way, if you put in Santa Claus at northpole.com, you'll need to go to that email address to
right.
slide.
Exactly.
So,
yeah. So wow, what a cool thing. That was our guy Rick
Can you
over at
imagine
the main
Santa
office.
reading his email going, what
the heck? What the?
What the heck?
I got enough going on, and now this. So,
Ooh, no, he'd probably be like, "Oh, Santa's getting in on this Fannie Mae IPO."
Yeah, right. Yeah. Hey, before 75,000 people type that word in there, Owen, someone did ask about the shutdown. Any thoughts on that from you? Just where we're at? What where are your thoughts on the shutdown?
I think the shutdown will last until TSA agents and air traffic controllers start to dial in sick.
Yeah.
And I mean, people, you watch the news, the shutdown is now like the third story or the fourth story. Why is that? Because people aren't upset about it. They did so many things to make shutdowns less severe when the politicians really got in trouble about the people that get paid. There's no stories about military families not getting paid. They're getting paid. And so, the biggest bitchers are like people like us, right? Hey, we didn't get the jobs report. What the hell is going on? And like people don't care, right? So I think it will end 5 to 7 days after a large swath of the general public starts to be inconvenienced. And I think that's most likely to happen. Air traffic controllers and TSA people are not getting a paycheck right now. Most of them have already missed one paycheck. So if you go to the airport, be really nice to the TSA people because they're not being paid right now.
Yeah.
But how long are they going to go without paychecks before Thanksgiving and Christmas?
Right.
I mean, come on, guys. Yeah. Right? That's not fair. And so when they start to do it's illegal for them to strike. But let's just say, if 50% of them get a bad cold at the Hartsfield-Jackson Airport in Atlanta and 40% of the flights are delayed or canceled, and congressional offices start getting their phone calls lit up, that's when I think you'll see it. But not enough people are having any pain about it right now.
Fascinating. Good stuff, man. All right. Well, hey, man, thanks so much, Owen Lee. It's always a pleasure. Once again, we say it every time.
Love it.
We're super blessed to have you, man. It's really great that you do this for us. We really
I'm blessed
appreciate
to be
man.
here. So.
Awesome, man. Love it.
And I typed in underwear. I didn't get this.
Well,
Chris,
if your wife gives you a text and says something's going on,
maybe Chris can do some of his AI wizardry, so that when I'm on
all these
Thursday,
interesting packages start showing up at his house. That'll
we
be
can do that.
Exactly.
he'll think he's Barry Manilow or something, So
all right,
the Frank Garay fathead. I love it. Let's do it.
All right, thank you, brother. Super appreciate you, man. It's always a pleasure. Chris Johnstone tomorrow. We're starting our series.
We are starting our series, ChatGPT 101, and we're going to do a quick little segment on ChatGPT Atlas because they launched their new web browser this week, and it is mind-blowing. If you think surfing the internet was cool, we just entered a whole new era. So we're going to talk about that and then start session number 1 in ChatGPT 101.
Awesome. Sounds like a lot of fun. So be sure to be there.
What's the name of that new browser again, Chris? I know you sent it to me.
Atlas.
It's just atlas.com.
So just go to
atlas.ai.
Yeah. So it's on the OpenAI website. I think it's openai.com/Atlas.
Ah, okay.
Yeah. I'll put it in the chat. Just
You're gonna put a link in for us. Stand by.
Frank,
Well, it'll be there tomorrow morning.
It's supposed to be
Tomorrow morning.
Yeah, there you go.
That's
Tomorrow
right.
morning.
There you go. Okay. Wow. Atlas gets started. Fascinating.
I can't
Okay,
imagine that's
good stuff.
I can't imagine that's going to make much of a vibe. You know, I just
Yeah,
can't imagine
right?
that being.
Yeah.
Google's not worried about that at all.
At
Yeah.
all.
No,
Yeah.
no.
All right.
No.
Okay, let's do it, guys. Thank you so much for joining us this morning. Always appreciate you being here. And thank you, everyone. And we'll catch up with you guys here. Minana. Have a good one. See ya. Adios.
Everybody have a great day.